Well, thank you both so much for coming. And would you like to introduce yourselves?
Hi Grace, I'm Robin. I currently work at Dext. I'm a practice solutions expert. I worked in practice for 6 years prior to joining the Dext team. And yeah, my main focus at Dext at the moment is with like MTD and all things MTD at the moment. So yeah.
Amazing, thank you.
So I'm Craig Ogilvie. I'm the Director of Making Tax Digital from HMRC. I'm super excited. Done quite a few podcasts, but this is my only second in-person one, and this is quite a nice vibe in here, so I'm really excited to be catching up with you, and I'll tell you more about me and what we're doing throughout the chat.
Amazing. Well, thank you so much for coming. So this is going to be all a big chat around MTD because it is just around the corner, and contrary to what some people are saying that it's going to be postponed, it's definitely not, and it is coming. So let's try, prepare and understand MTD as much as we can. So Craig, for those who don't know what MTD is, could you give us what it stands for and also why it's come about?
Absolutely. So let me just I used to tackle this all the time. Is it happening? I've been in charge for over 2 years. I've maintained it's happening. I've got less than a month. This is absolutely happening. It'd be strange for me to sit here in March and say it's not happening. It's absolutely happening. So Making Tax Digital, generational change to self-assessment. It is the biggest change since 1996 or whenever SA came in. So if your income in the 24-25 tax year is above 50,000, that's gross top line turnover from self-employed, i.e. sole trade or property, you're in from the April 26 tax year. That's less than 1 million, but 860,000 will be in that group. The following year, based on the 25-26 tax return, of weight being over 30,000, you'll be in from April 27. And then the last group is based on the 26-27 tax year, your income in that year, same rules. Then if you're over 20,000 gross, you'll be in from April 28. So it effectively is for sole traders and landlords, the need to register with HMRC, keep digital records, and submit light touch quarterly updates from the 7th of August and every quarter thereafter. And I know I'm stating the basics, but just in case the one listener that hasn't been listening over the last few months doesn't know that. So every 3 months, these are light touch quarterly updates. So if we could take away anything from today that aren't tax returns, you can choose to make them adjusted and more complicated if you wish. But let's focus on the fact these are light touch. At that point, people say to me, well, why bother? Why are we doing this? Is it extra burden? So I maintain these are light touch, but actually this allows you to interact with the tax authority and for us to use your data much better. So we will be able to pre-populate and nudge and help people get their tax right. We'll also be able to provide estimates of their liability throughout the year. And for some that won't be overly accurate, seasonal workers, but for the majority it will be. So using data for the first time better. And fundamentally we're doing it because we believe it will reduce the tax gap. Lots of people in the self-employed space make errors that we class as failure to take reasonable care. Not hugely deliberate. Better record keeping, better bookkeeping, we think, means better outcomes at the end of the year. So much more I can say, but fundamentally it's about, helping reduce the tax gap. But more important, just as importantly, I believe, having seen this in live, is that if you run your business using software, and all of this is done through third-party software, the submissions at the end of your tax return, ultimately my hope is tax becomes a part of running your business and you get wider benefits than just the tax man telling you that the tax gap will be less. I think it's much bigger than that.
Definitely. And I think the tax liability is really important. We have it from clients that we have created on an Excel spreadsheet because we're massive nerds, tax trackers. So we update it on a monthly basis based on their bookkeeping, and we're able to give them an idea of what their liability might be. But obviously we can only do that for our clients. We can't do it for everyone. So using that data effectively so people know how much to save, I think is really important. But the next question is, why is it April 2026, the chosen deadline, and why start with those earning over 50,000?
This was first announced back in 2015, which is
many moons ago.
Many moons ago, yeah.
I don't think I'd even sat my GCSEs.
Yeah, I was in HMRC delivering big programmes at that point. I was in a sister programme at the time, so I do remember it well. And I led the internal rollout of Making Tax Digital for VAT, which was a big system change. We're breaking it down in a sort of steady rollout. So we're not bringing in 3 million at once, 13 million. We're bringing in less than 1 million. And we had to pick points that we think was a sensible and steady starting place. So April 26, I started leading the programme over 2 years ago, and the first job for me, because we had deferred it a number of times, and there was very good reasons for deferring it, but that had really broken confidence not just in the software industry, but with accountants who'd went out and saying, this thing is happening, I need to get you ready. So I had to be sure that April 26th was a deliverable date. I had to ensure the ministers were confident that was the case. So the way I think of bite-sized chunks to get it ready, start it from April 26th, have a soft landing on penalties in the first year, and we plan only the first year only. And then the next year you start to roll it out rather than have a big bang approach. So I just think it's a common sense timescale from my perspective, and it's absolutely on track to deliver.
Amazing. So could you walk us through what a typical quarterly update looks like? And what does a sole trader or landlord need to submit and how often?
Absolutely. So even before I jump to that point, I guess the big thing that I think about just now is that, like, whether you're an accountant or whether you're just an unrepresented customer, everybody has to be signed up. So the first thing for me, if I'm an accountant, is my agent service account working? Do I have it for VAT? If not, have I got that ready? And there's a simple process where you map the existing relationship that you've already got on behalf of your client from self-assessment to this agent service account for Making Tax Digital. Doesn't change anything, doesn't bring them into MTD, it just makes sure your agent service account is ready. So I think I start for the principal agent service account, then about 4 minutes to sign a client up. That's done in gov.uk. I want everybody to do that as early as they possibly can. And as of today, we're at about 65,000 people have signed up. Obviously, not everybody will sign up by April. It'll grow over the year. But just since I've got the mic, just really encouraging people before they even think about quarterly updates, have I got the agent service account ready? If I'm unrepresented, am I signing up? If I'm an agent, have I got a plan to sign up all the clients? It's then all about selecting your software, keeping digital records. So if you choose not to sign up by April, you can still keep your digital records and sign up and then do your first quarterly update by the 7th of August. Hopefully, just as a bit of, please sign up. I think don't leave it is a good first action. In terms of that quarterly update, it is about keeping a digital record, and you can do that through, one of the things I'm most proud of is the volume of choice. So you can use spreadsheets and what we bridge those across. You can use all-in-one accountants packages and bookkeeping packages. It's your choice as an accountant, and I think that was made really clear to me that there isn't a one-size-fits-all. You need to be able to allow accountants to make the choice as they do at the moment. So get your software right, and then ultimately it's only income and expenses, and we do it on a cumulative basis. The original design was every quarter, and the tax accountants and professional bodies said we don't like that. It means there's error correction, there's end of period statements. Can we just make it simple and cumulative? So for each of the quarters, keep the income and expenses, make sure that the category, the type and date is clear, and that there shouldn't be any backwriting of the digital record. However you do it, it should be traceable from point of digital record to submission. That's the basic principle. But if you do good bookkeeping, good record keeping, then the quarterly update becomes a check, and it winds the industry up to say it's a click of a button. It can wind accountants up. But ultimately, if you get the bookkeeping right, I've seen it in action, it's not hugely time consuming. So I'm not going to patronise people by saying click of the button. Keep the record right and ultimately get that submitted. And that's it. You've got your first quarterly update in, you'd signed the client up, and then you'll start to see those estimations grow. And by the end of the year, we pre-populate everything. We pre-populate more than we've ever done in the classic system, things like construction industry scheme. So it means that we'll pre-populate more. And just jumping back very quickly to the estimator, and I love what you do with the spreadsheet, but one of the things that our estimator calculator will do is we'll also look at other things that we've got in record. So while it's an unadjusted quarterly update, people say to me, well, is that really great for estimating? Well, we can look at pay-as-you-earn, we can look at... So we've got more information, will help to inform that estimation. And we'll make it more sophisticated over the years as we get more insights.
No, that's really helpful, thank you. And I think just jumping back to signing up, I think it's really important when accountants or represented people are signing up to know what information you need before you call. Because when we did our first one, we didn't realise that you needed the date of when you first became self-employed.
Yeah.
And so we were like, okay, we'll get back to you. And then the client needs to know and be able to find that piece of information, because it is really crucial. But I think understanding all the information that you need to be able to call up and not have to hang up and sort it all out whilst you're there is also really important.
We can put links in to help people. The other thing is, if accountants are out there and want extra help, my team can actually do hands-on bespoke sessions. But on the date of when you signed up, we heard from accountants that helped us build the system. That's not good to try and get that. So we only ask for that if it's less than 2 years. So if they've been trading, most of these people, their trades because it's the 24-25 tax year, will be out with that date. So actually the date you need to put in will be in the minority of cases. And we listen to users' feedback to say, do you really need that? And the answer was not for a period of more than 2 years. So let's not ask for it.
Perfect. And so HMRC won't be supplying software for MTD, but how do you ensure people can find something that's affordable and reliable, especially as we get into the lower brackets where the net profit might not be as big, whereas the threshold at the moment is 50?
Yeah, this is a big decision, actually. I think from my perspective, HMRC will still provide the services where people can go in and look at their agent service account, look at liabilities, make payments. The underpinning tax system is there in digital services. What we don't offer is the digital record keeping, the quarterly update or the end of year submission. And I think the thing that gives me confidence is there is generally a really strong free offering, particularly for unrepresented customers out there. It wasn't always the case that was a strong offering, so it's over 20 big names. And it's not just a case of it's just the absolutely smallest amount of transactions. There is choices with certain bank accounts that you can have a free bank account and free software, or certain software providers, I won't name softwares today, I'm allowed to recognise them as part of the process, but I never would dare to push one more than the other. But I think the thing that gives me confidence is that the free software market is strong, but that doesn't mean that free is right for everybody. Again, choice is really important, and perhaps lower cost, or actually, we had a chat about software before this, you may choose to pay a bit more and get other types of software. So don't take it that because I'm confident we've got a free software market, that actually that's the full answer. It's nuanced, it depends on what the needs are. But if you're an unrepresented customer, and in that first cohort about 200,000 don't have representation, then they will have to get used to using third-party modern software to do their digital records, their quarterly update and their end-of-year tax return. Let's just be honest about that, get ahead of the game. I think that's absolutely the right thing to do, and the more we're clear on that, the better.
Definitely. And Robin, what have you heard from accountants and customers around potentially challenges with software for MTD?
Especially with the conversations that I've been having recently, I'd definitely say that the accountants have realised that one software doesn't fit all. So it's definitely going to be like using several different softwares for their clients that will work best for them. But yeah, like definitely, because the clients are obviously all clients are different individually. I think the conversations that I've been having, they basically just said we're trying to find the best softwares for them and also price efficient.
Yeah, and I think because we've got landlords and sole traders, those are very different. And I think it's important to say that obviously if there is a landlord with multiple properties, each of the properties have to be listed out separately for the quarterly submission. And so we might find that one software does that better than another. Yeah, and I think that's really important. And the choice pool is so big, which I think is really good as well, especially for the choice for accountants and customers too. So what happens to someone who simply doesn't feel comfortable using software or technology when it comes to MTD?
There's a couple of options. I think the thing I would say is that the software is really user-friendly. I can say that because I've seen lots of different types of it. I've seen it in action. But we recognise in delivering Making Tax Digital that not everybody can use digital tools and digital services. So if you absolutely can't, if it's not reasonable for you to use digital services, we've got an exemptions process. It's either by writing or by phone. And we make a decision. We need a bit of evidence, whether it's due to issues such as geography, disability, age and other things. And as it stands right now, we're approving the significant majority of what we're receiving. We're not asking for lots of additional information. So say for something like when I last look, it was about 1,000 were approved, 300 we asked for more, 150 we asked for more information, 300 we declined. So there is a choice there in terms of digital exemptions if you definitely can. If it's just a choice, that doesn't kind of make the watermark. You do have to follow the legal requirement. I think the one thing we've done is we've tried to make our guidance as good as possible, and genuinely the feedback on the HMRC's gov.uk guidance has been really good, partly from an accountant's perspective, because actually it's been accountants that have helped us build the guidance. Professional bodies have brought accountants into the team to build the how-to guides and so on, and also from an unrepresented perspective, having clear campaign pages where they can just click in and get the information. Always work to do there, but getting good supportive guidance. And ultimately, if people are struggling, they can phone us up and help us. If you were in testing, one of the things that I was really pleased with our customer support team, you only access them if you were in testing. And if you did, there was pretty much no wait times and highly, highly trained people in MTD. As of today, we're rolling a similar model out to the mass operations. So if you call up the agent dedicated line or the self-assessment line when it's about MTD, you'll go through MTD trained people. So I think that's a really positive thing as well. But have a look at gov.uk, and if you genuinely feel that you interact digitally, then there is the exemption process.
Amazing, thank you. And if someone thinks that MTD doesn't apply to them, what steps should they take to verify their qualifying income? And could you also explain the 2-year rule as well?
It's the legal responsibility of the individual to understand their mandation status, but what we will do is write to customers. Now, that's based on their 24-25 income. As I said at the sort of start of the show, it's the 2-year rule. It's the tax year 2 years before the tax year that you're mandated, i.e. April 26. So if your income for that year, and it can be 30,000 from self-employment, 21,000 from property, then your gross income you're in, unless you meet one of the exemptions that we'll maybe touch on later. When you're in, you're also in for a minimum period of 3 years. So if your income drops below, which would need to be 20,000 in the 26-27 tax year for the April 28 date, you're in. Only if it dropped below the 20,000 and it needs to be for that 3-year period would you be out. The questions I get a lot at the moment is, what, because of the 2-year rule you refer to, if my income was over 50,000 in 24-25, but I cease all trade in 25-26, what do I do? You've got a couple of choices there. You can phone us up and we can correct the record so you won't legally come in. You can write a letter to us, or if you did have to register, you'd come into the new penalty system, and we'll probably touch a bit on that later, and you can opt yourself out. So there is some choices there. One thing I would flag up, just to be really detailed, if you had, say for example, 51,000 self-employment in 24-25 and 10,000 property, if you cease your self-employment, you're in for your property for the 3-year. Just some rules that are just worth reminding people about. People don't always love the rules, but they're the rules.
Perfect. And so just to touch on the letters tell people to speak to their accountant first. What responsibility do agents have in getting their clients MTD ready?
Super question. So it's the responsibility of the customer, the taxpayer. And we've had these debates because I think the accounts industry's actually been terrific over the last year, in particular professional bodies. And I had somebody once suggested I expect accountants to get other accountants ready. Of course I don't expect you, but naturally accountants do help and do make a huge difference. And I don't just say that because I'm sitting with an accountant. But
oh, thanks, appreciate it.
So it's not your responsibility, but ultimately if you've got clients, the sensible thing for you to do is to make sure you know what clients are in and offer them the best service you possibly can. I just think that's really a sensible thing to do. We always tell the professional bodies, I stick it on LinkedIn or gov.uk when we're writing to clients, so that we try not mean that you're sort of caught out in any way, but fundamentally that's it. Yeah.
Amazing. And Robin, there's been a lot of talk about segregation of clients, so you know who's coming in when. What advice would you give to accountants still preparing for MTD?
A lot of the accountants I've been speaking to, they have said that a lot of the letters, they're just waiting for the clients to reach out to them, especially the ones that I spoke to recently. But a lot of the accountants have just done their segmentation after obviously Jan, and I would just recommend reaching out before they come to you if you can, especially they see the letter and then they panic. I would say don't panic, reach out to your accountant on the client side, but also the accountant to reach out to their clients rather than waiting on them.
There's nothing scarier than a brown envelope. Yeah. And so a follow-up question for you, Robin. How does MTD, including the quarterly reporting, change the accountant-client relationship?
Yeah, I think it actually, this is a huge opportunity with the client and the accountant relationship. Obviously, usually these clients, it's normally a bag and box, once a year drop off that they speak to the client. There's not regular touch points, whereas now with the quarterly updates, there will be a lot more regular touch points. They'll have a lot more insight to the business. And I think that's where they can start offering more advisory services and give the client a lot more insight to their businesses, which they probably haven't been able to have before because it's all such a rush and such last minute. So yeah, I do think it's a massive opportunity for the accountant and client relationship.
Definitely, and it allows us to do more advisory things like tax planning, and again, having those more regular touch points, and also increasing accountancy fees. Instead of just having that one-off tax return, actually you've got these quarterly submissions, maybe you're adding bookkeeping on top, and maybe you're adding the tax return at the end as well. Craig, do you have anything to add?
The interesting thing for me is the current system ends, I think, 21 months from the start of the tax year. I won't tell the stories of my dad being a bricklayer and me going to his accountant. Nobody will get the ear comm as if it's,
you
if
mean
they're just listening
Dodgy Day from the pub?
Yeah. it was SC60s or something before the construction industry scheme. It was well even before my time. And I said, I'm not going to tell a story, then I start telling the story. But I used to get sent to the pool table to play pool for hours, and they would do the end of your tax return. And you think to yourself, like, I know not everybody does that. And bad paper records can be as good as bad digital records. But fundamentally, when I sit down with accountants or bookkeepers and say, like, does anybody fundamentally disagree that more real-time, better record keeping isn't a good thing for not just the tax system, but running your business? And that's where the other services come in. I like to think of it genuinely. So there's a cost to making tax digital, right? Free software, etc. But overall, there is a cost to it. The benefits far outweigh the cost. But I think the thing from my perspective is, if you can think of it like bite-sized chunks, you need to do the activity anyway. Why not do it on a cumulative basis over the year? And I've genuinely seen accountants in practice that operate this way just now, and it works. It really, really works. And, clients are happier. Ultimately, the outcomes are better overall. So, and I think I try not equate too much to MTD for VAT, because the income tax population is so different to the VAT population. But that said, if you go and look at the evaluations and peer-assessed evaluations, etc., something like 69%, I'll get these stats wrong, so I'll qualify that, found it easy using software. It drove productivity benefits into businesses. It made them able to make better choices. And I know they're different taxes, but ultimately running your business is running your business. Again, my huge ambition is that running your business means that tax becomes a part of the natural system, and you run your business, and everybody wants to run their business better. If I say to them, let's run your tax better, it's less exciting, isn't it? I genuinely believe it. And why do I believe it? Having been somebody that's not run a business, because I've went and seen it. I've spent loads of time with accountants, practice and bookkeepers that do this. It works, That's why I'm confident. And also I look at it at macro level, because people will be able to show me the most beautiful paper written ledger and show me their taxes right. Of course they will, but at macro level we've got an issue with record keeping, and it swings both ways, both in terms of less tax, more tax. Just get it right. And if you get it right, then I think that's good for everyone.
Definitely. And so to go back to penalties, which has been brought up a couple of times, what is the new late payment penalties and how do these work under the new rules?
Brilliant. So I'll answer the payment one, but just we think of the filing one first, just because my head always works left to right. So the late filing at the moment, you miss your self-assessment return by the 31st of January, it's a £100 penalty. In the future, if you're an MTD, if you miss the quarterly update or the end of the year, you get a point for each one. You need to do more than 4 to get a financial penalty. We believe that's a good warning system. It's good to nudge customers in the right behaviour. Generally think it's fairer. On late payment penalties, in the first year, you still get that 30-day period to either make the payment or agree a time to pay. And I always say, if people are struggling, the best thing you can do is get in touch with HMRC. We've got online tools that can look at time to pay digitally or talk to us, then takes control of the issue spiralling out of control. So you've got that after the first year will reduce to 15 days. And as I say, all the percentages and stuff are on gov.uk, as I've had a very long week, so the exact percentages, etc.
I won't test you. I won't do a pop quiz, promise.
You're right to say they are changing. I feel that overall these are positive changes for people that find themselves in penalty situations that we think a better system can help them with. So when you come into making tax digital, even as a volunteer, when you're not mandated, you come into new penalties. So really important that we touch on that. And just while I've got the mic, that soft landing period in the first year, we announced that earlier than we've done in the past, and I think that's just the right thing to do. It's such a major change, but it doesn't mean people don't have to comply. You won't be able to do your end of year tax return if you don't do your quarterly update by the end of the year. You need to comply, even though there's a soft landing period. I'll be working hard behind the scenes to make sure we do all we can to get people to comply. I do think supportive in the first year is a right thing. Final thing is, if they get it wrong, we're all learning a new system. My aim isn't to be punitive. Correct it in the next quarterly update. Cumulative quarterly updates, you asked for them. I think they're much more user friendly, and we are looking to be supportive in that first year. So, read the PCRT guidance, the professional conduct in relation to tax from your professional bodies. It's really clear on what's acceptable and what's not. Zeros, made up figures, not acceptable. Do your absolute best is my message.
Definitely. Do you have anything to add on penalties?
Yeah, I would just say, if I was working in practice and I was dealing with my clients today, I'd probably say don't tell the clients that there is the soft landing period. I would treat it as technically like a trial run with you and your clients. You can see what works, what don't work, but also don't like let them know, because you're just pushing that problem down later down the lane, and next year you've then got the next threshold. So use it as like a trial run for this threshold, see what works, what don't work, and then work your way from there. But yeah, don't look at it as like this is a free year to be exempt.
Definitely. I also think it's about installing good habits in clients and accountants as well. So I think what you've said is really important. So the threshold drops to 30k and then to 20k in subsequent years. Is the ultimate goal for MTD to cover everyone in self-assessment?
It's a good question. So at the moment, that'll grow. I think we're really open-minded to see how things bed in and how things go, but there isn't a project or programme that brings everybody in. What will need to be true is that we will have to migrate all of these 13 million, not just the 3 million in MTD, to a new tax platform, which will give them the benefits, the new penalties, and we've not announced a date of when that happens and what that means. So that's, the industry's really interested about that, but at the appropriate time we'll give enough notice in the work we're doing behind the scenes to bring them in. I could tell you all the positives of MTD. One of the negatives is you have to correct behaviours that have already started. If I had my time again and I was looking at this 20 years ago or 1996, would the answer not have been when you register, whether you're a business or sole trader or have property, let's just use the word business. I know that annoys people, right? But I don't really mean a business, but I'm just using it as shorthand. When you register or when you start acting like a business, how great to get into that habit for the beginning. That's why I'd encourage people why, volunteering and coming into it is a really good thing, because, and you need to have an SA return on record to come in, because there's some rules, the 2-year rules you applied. But that's one of the negatives with MTD, is you're correcting behaviours where actually, how do you run your business as a really good business with the right help and support for day one? I guess, that's something for us to think about, but there's no definitive plans to go further at the moment. And if that changes, then ministers will announce. We work really closely with industry. Hopefully you can see that. Like, one of the things that I've done is bring real accountants into the team. That's worth its weight in gold, because you're getting first-hand, like, really strong views. And also our interaction with social media. The reason we know each other is because I follow and see what you're up to. But the beauty of it is that I get all these, like, in the old days, you have to have analytics for every system. Like, we've got state-of-the-art analytics, but I know if something's going wrong because Jeannie for LinkedIn will get in touch and tell me exactly what's going on. And I love that, actually, like, because it means that I've got my finger in. My team probably don't love it because I'm constantly reacting to things. But the world's changed in terms of social media and how we react. But at the moment, there's that was a short question, long answer, no bigger plans that I can really share.
Thank you. And so for both of you, we'll start with Robin, but what's your message to anyone who receives one of the mandation letters and feels overwhelmed about where to start?
I'd say don't be afraid. And like we just mentioned earlier, like, brown letters can be scary, but I wouldn't be afraid. I'd reach straight out to your accountant, or if you don't have an accountant, start looking for an accountant that can help support you and talk about the workflow, because it can seem very daunting. They can talk about how it is going to be better for your business, as we spoke.
It's definitely the message. Hopefully people, if they're listening, are seeing this, right? The brown envelopes are a thing, but they're effective as well. I know a lot of them get handed to accountants. I guess the question maybe, can we, for the next cohorts, change the colour of those?
Yeah, could we have maybe pink envelopes to make it more exciting, or gold envelopes?
I'm going to take that as a request. No promises, but since you've asked. But I think the thing for me is, genuinely, the person running at this at the tax authority, I'm the person accountable for delivering this. It's my team. We want to get it right. We don't want to give people a hard time. We don't want to be punitive. We want people to engage with it. So, as you say, easy to say, don't be scared, but what can be true to make people, as the tax authority saying, we want you to get this right. If you work to engage with it, the main thing is sign up, get the quarterly update, and learn as you go. Let's be supportive. And as I say, if you're an accountant's practice, and your accountants are amazing, right? But there'll be those that are out there that are worried about this as well, can reach out to HMRC. We can do stuff to help them as well.
Definitely. I mean, when I got in contact with Sam Wood, because I bumped into him at Accounting Excellence, he has been nothing but delightfully helpful and has put my mind and all of my team's mind at ease, because I know if I have a question, like I did last night, just emailed him and CC'd in the team, and then he replied, and now everyone knows the answer. So it's really nice for HMRC to be so helpful and understanding, because it is new and it can be overwhelming for accountants because we haven't done it before.
He was an accountant, is it? Like, that's what we brought in. Senga Pryor into the team as well, who was past president of Professional Body. I'll get that wrong and get in trouble, but there is just Like the more you embed real knowledge for the industry, it makes such a difference. Having people that have done goes a long way. And we're genuinely here to help. But obviously, we can't individually help all 860,000 in the first year, but we can do our very best to do everything we possibly can.
Definitely. Right. On to some quick fire questions. So these are the most commonly asked questions that I get on my social media. So the first one is, do accountants need to get quarterly submissions signed from clients?
No. So you can choose what you want to do. It's a choice for you, but read the PCRT guidance. These are not tax returns. They're not subject to the same rules. That's not just me. That's the Professional Conduct in relation to tax. So I'd say quick answer is no.
Perfect. Can you choose cash or accrual basis for MTD?
So you start on cash, and actually this has changed over the course of the year. You only have to definitively make the final choice at the end of your submission point of view. Originally when we built the system, we built it in up front. Obviously as you're running the year, you need to decide that up front, but there's nothing in the HMRC systems there is in the software. So get it right for the start of the year. Fundamentally, if you need to change it, certainly from an HMRC perspective, I'm not sure about software, they'll be different. At the end of the year, you can make those amendments, but you do start on a cash basis to start with.
Thank you. So will there be penalties if you find out your 25-26 self-assessment that makes you within the threshold for MTD, but you didn't know by April 26?
Definitely not. So your 25-26 income will determine April 27. So as long as you comply, so say you're over 30 in that year and you're still trading, you need to comply by April 27. If you, in that year, miss your first quarterly update, you'll get a penalty point, and that will grow up because there isn't a current plan to have a soft landing in 27-28.
So if someone made over 50k in turnover in the 25-26 self-assessment, if they think they may be near that threshold, to complete their self-assessment ASAP, so they know whether they need to be doing these quarterly updates.
If they go over that, remembering that it could be over 30,000 in 25-26, if it's over that, they'll automatically be expected to operate Make Tax Digital from April 27. The timing and when you do the tax return, as long as you do it by the 31st of January, doesn't really matter. And even if you make amendments up to the 6th of April or the 31st of March, doesn't really matter. So I think we'll notify you and bring you in. But in the 20, if you're not in based on your 24-25, and 25-26, if you're over 30, you're going to be in starting April 27.
Perfect. Do you think MTD will lead to more or less investigations?
So theoretically, it should lead to less. We, as a department, have to bring in more tax revenue to fund public services. So it's a bit of a, how big is the balloon? This doesn't solve all the problems. So I think what I can say is if you're getting it wrong because of simple bookkeeping issues, then this is going to stop you getting into laborious compliance investigation. That's true. What it does about the macro number of investigations, there are too many other variables, because I think there's enough air in the balloon to mean that those investigations will be there. Does that make sense? Like, it's a good thing because you can save your time not having that more challenging investigation. I think MTD will help people not get in those positions.
What incomes are included and excluded when calculating turnover?
So this won't work for everybody, but in old money, I think of the SA boxes. So the SA 103 is your self-employment and the sub boxes. So that's your sole trade. And for property, it's 105, and for property it's 106. So basically, if you've got income from sole trade or property, that's what brings you in. There are exclusions from MTD, and genuinely, I mean this, our guidance is really good. Some of those are completely automatic based on your 24-25 information. So if there's something on the tax return that, for example, shows that you used the SA 109 box on residency, we can mean that you don't need to apply it for a year. There's a deferral in that scenario. If you use averaging adjustments, again, we can take you out based on that. However, if you're a deferred group, and I've mentioned two of them, the SA 109 and averaging adjustments, just as quite recent ones, if the tax returns don't show us that, you just go through the same process and apply for an exemption, but it has to be one of the stipulated examples. And what gov.uk does, if you're automatically exempt for these reasons, then you don't need to do anything. If you're in the 26, 27 and you're likely to be exempt, then this is when you apply to us. Too many to go through the checkbox because there's quite a few in there. Have a look at gov.uk. Make sure you're familiar with the exemptions. Most of them will be automatic. But as I say, if you are an average in adjustments and you've not had that in the 24-25 return and you think your client's going to use it in 26, 27, you can get in touch with us and we can make a decision on an exemption for you.
Perfect. And the last one is partnerships. They're not included, but are there any plans for them to be included?
So definitely not in based on qualifying income, but we have people that have that do a self-assessment return and have partner income, so they'll have to report that at the end of the tax year, and there's no current data plans that can reveal today on it. I think the main thing is, like the partner, dividends, pay as you earn, they're not eligible in terms of your bringing you in. You do have to take care of them at the end of the year through their final tax return. Some of them, like pay as you earn, will pre-populate.
Amazing, thank you. Robin, is there any last thoughts, quotes, feelings you would like to leave us with?
I would just say, obviously, it's very, very close now. And if you are still feeling overwhelmed, obviously, what we spoke about today, there's lots of resources out there.
Any last golden nuggets from you?
I think from my perspective, like, this massive, it's a huge replatforming at Tax Authority, societal change for accountants, bookkeepers, tax agents, customers. We know how big this is. What I would say is we've tested in the many thousand during the testing period. So we've had every quarter over 4,500 regular quarterly updates. We know the system's working. We've got really good support. The big point is, you say, don't put off the sign up part of it. If I'm sitting there and I'm even a small or medium-sized accountancy firm and I've not got a plan to sign those clients up, that's 4 minutes per client. And just to be really clear on that, if you don't have a plan to sign them up, that's a big gap. So have you got the agent service account going back to the first principle in good shape? Are you mapping those? Do that. It doesn't take anything away. It just means existing relationships are mapped into a new system. Click a button. Every agent code you've got, put across, it's genuinely dead easy. Have a plan to sign those up, preferably before April. But if you're not making sure they're keeping digital records, and that you sign up and do that first submission before the 7th of August, get into the habit of doing it. We're genuinely here to help, and we know how big this is. We've ran in Make Tax Digital for a number of years, but we are, as you say, we need to make sure it all works, including the end of year process. Ultimately, that's the key part. Digital record keeping will help that. I'm excited, but it's a huge deal. Things like this really help. I'm not just saying this to be, like, how do we get the message out? I'll be on radio. We're doing loads of advertising. Software market's doing a great job advertising, professional bodies. If anybody does want to lean in and just, if we've got an accountant buddy or somebody who is a sole trader, just say, have you seen this thing? It doesn't do any harm, but behind the scenes, the research has shown us we're moving in a really good position. So onwards and words, we're here to help and be supportive in the first year. And just a big thanks for having me on the show.
Anytime. You can come back for more MTD talk, but thank you both so much for your time. I really appreciate it.